Ready to build your real estate empire, but confused about whether to operate as a sole proprietor, LLC, or S-corp? Let's dive into the business entity options every realtor needs to know. First up, the sole proprietorship. This is the simplest structure, where you and your business are legally the same, easy to set up, just start working. But remember, you're personally liable for all business debts and lawsuits. Taxes are filed on your personal income. Using Schedule C, it's straightforward, but lacks liability protection. Next, the limited liability company, or LLC. This separates your personal assets from your business debts. If your business gets sued, your personal savings and home are generally protected. LLCs offer more flexibility in taxation. You can be taxed as a sole proprietor, partnership, or even an S-corp. Forming an LLC involves filing paperwork with your state and typically requires annual fees. Now, let's talk S-corporations. These can offer significant tax advantages. You're considered an employee of your own corporation, allowing you to pay yourself a salary and take the rest as dividends. This can reduce your self-employment tax, but S-corps have more complex setup and compliance requirements, including payroll taxes and corporate filings. This is often best with an accountant. So, which is right for you? A sole proprietorship is simplest, but riskiest. LLCs offer liability protection and flexible taxation. S-corps can save on taxes but are more complex. Consider your risk tolerance, tax situation, and administrative capacity. Consult with a tax professional and attorney to make the best choice for your real estate business. Good luck.